what's up, everybody? It is Monday, December 28th. Merry Christmas. I hope all of you had a Merry Christmas and a happy holidays. And this week, of course, it's going to be New Year's. It's going to be different than a lot of past New Year's, but hell, this whole year was different in so many ways. All right, folks, last week, or maybe it was the week before, I don't remember. Oh, let me just say, and you already know this, that Trump signed, ultimately he ended up signing the $900 billion COVID relief bill. You know, he kind of went silent on that, and it looked like for a while that he was scuttling the deal when he came out after the deal was made and said, hey, everybody ought to get $2,000. And, you know, that just, to me, seemed very disingenuous because he knew that wasn't going to pass. And then it was actually blocked in the House, that measure. But I just heard that the House did pass the $2,000 check bill tonight, but it has to go to the Senate. We'll see what happens. Anyway, that's not what I really want to talk about. Let's just talk about first the $900 billion COVID relief bill. This, you know, in spite of the fact that this bill is way down from original proposals. Remember, we had the $3.1 trillion proposal by the House. They voted on that. I believe it was in October. The Senate had its version. It was a $1.8 trillion. None of those went anywhere. We ended up with the $900 billion now, and so I get it that a lot of people are disappointed. It's $600 checks. It's measly. It's ridiculous. But again, I talk to you here. You know, this is not a socio-economic, a social podcast, video necessarily. I talk about the markets. So what I'm going to say is, even though it's a much smaller final bill than the original ones that were, you know, discussed or voted on, this is going to add significantly to the fiscal flows. And as you know, because I come on here every day and I tell you that the fiscal flows are at historic levels, they're at record levels, they're adding to the amount of flows in fiscal year 2020, which was a record. It has been the principal reason for the stock market's buoyancy and the economy's, you know, functioning at the level that it is, and not like in a deep recession. Those are income transfers from the federal government into the economy, and it has been helping. And now with this bill, it is going to be significantly increased. Now, if they do end up passing the $2,000 stimulus checks, you could just imagine how much more of a boost that's going to have. Now, what this is creating, and you could see this manifesting in markets, and it's what I've been talking about. You know, you got strong equities focused in certain segments of the economy. You know, you have tech, obviously. You have cyclicals and materials now that are doing very well. And the banks, which I've been pounding the table on for a long time. And that's going to continue. And you have the inflation impetus that is happening right now. And you see that in gold, in commodities, in oil. And I believe these things are just getting going. You see it in Bitcoin, obviously, which has become a very widely followed speculative vehicle, maybe reflecting this inflation impetus. Now, you also see it in the dollar weakness, and you see it in the weakness in treasuries and the rise in bond yields. These trends are going to continue. And whatever additional fiscal stimulus we get, it's just going to add to the forces in play. Now, I want to talk about one thing. I did a video, I was about to mention this a couple of minutes ago. I think last week or the week before, I said, you know, I talked about it. Remember, it was CNBC. It's baked in. When they came to the stimulus deal, the market went down. And CNBC, its commentators, in all their wisdom, right, said it's baked in. And I said at the time, people who say things like baked in, they're people who really don't know anything and they want to sound like they're smart. So they come up with these figurative language terms like baked in, these metaphors. It's ridiculous. It's silly. I said at the time, look, nothing is baked in. Not a single check has gone out. Okay? No extension of the unemployment benefits. No supplemental unemployment. All of these things, all the benefits of this bill and the measures embodied in this bill had yet to be felt or received by the economy. Nothing was baked in. And sure enough, here we are today at a new all-time high. So, I mean, when you hear people speak in figurative language like that, using metaphors, that's just like a cover-up for their ignorance, to try to sound smart, to try to sound intelligent. It's goofy, it's silly, it's dumb. I told you, nothing was baked in, it's going to keep going up. And all of these trends, like dollar weakness, like today, for example, look, dollar was weak coming into the U.S. Market time zone. Then what happened? It rallied. Now there's going to be people saying, oh, that's the bottom of the dollar. That is not. It's going to continue to go down until we have a major policy shift that seeks to shrink the deficit, both the fiscal deficit and the trade deficit. I just don't see that happening for at least a year, if not another. I mean, I'm talking, for me, it's probably around the 2022 midterm elections that you might see Biden turn into a fiscal hawk, because he believes that would be politically expedient. I don't know. But I mean, I just look at this, and I mean, it's not just amateur traders who are saying this, or amateur market observers. I mean, you had Morgan Stanley like a month and a half ago saying the market was oversold. The dollar was oversold. I mean, they left so much on the table. This is a big, major Wall Street investment bank. And like, they're passing this off as information, oversold. I mean, what does that mean? If conditions are a certain way dictating a trend, then that's what's going to happen until those conditions change. Anyway, nothing was baked in, as I said. Now, normally today's Monday, I send out the MMT Trader Report. The new issue did not go out today because all of the data releases were postponed last week because of the holiday, because of the Christmas holiday. So I'm compiling all that stuff today. The report will go out tomorrow. Remember, you only got the remainder of this week to sign up at the current rate of $395 because it goes up to $500 a month on January 1st. All right, everybody, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial now while you can still get it. Take care. Bye-bye.